Right now, as you watch this video, the largest, most powerful industry in the history of human civilization is being dismantled and rebuilt by machines. Financial services, the sector that touches every mortgage, every paycheck, every loan, every insurance premium on Earth. When you add up the aggregate market capitalization of every financial institution on this planet, every bank, every insurer, every asset manager, you arrive at a number so large it barely feels real. $17 trillion. One industry, 25% of the entire global economy. Banks have spent billions preparing for this AI revolution. They've hired the engineers, they've built the platforms, they've published the press releases. They are, by every measure, ready. There's just one problem. The most advanced, most successful, most profitable use of AI in finance right now isn't being run by the banks. Today, we are going to trace the full arc of what's happening to your money. We'll follow Fintech from its pandemic-era gold rush to its brutal winter collapse. We'll show you how AI is systematically eliminating entire categories of human jobs inside the world's biggest banks. And then, we'll pull back the curtain on the invisible cyber war being fought right now, in real time, for everything you have. Welcome to the Fintech Archives. This is the $17 trillion AI war. To understand where we are, you have to understand where we've been. And the story of Fintech follows the seasons, with the drama of all four. The summer of Fintech started in 2020. A global pandemic had just locked the entire planet indoors. Physical cash became dangerous. Bank branches closed. And suddenly, every person on Earth needed a digital wallet, a mobile payment app, a way to borrow money through a screen. Venture capital smelled blood, or rather gold. The money poured in at a rate the industry had never seen. At the peak of the frenzy in 2021, an almost incomprehensible one, in 4 venture capital dollars being deployed globally went directly into fintech companies. 25% of all VC money on the planet. Valuations were untethered from reality. Buy now, pay later apps were worth more than century-old banks. Crypto exchanges were printing money. Neobanks with no profits were celebrated as the future of everything. Then came the winter. The second half of 2022 is now referred to in the industry simply as the fintech winter. Interest rates rose, the easy money era ended. And VC funding didn't just decline, it evaporated. Global fintech funding crashed by 46% in a single year. Companies that had raised at absurd multiples suddenly couldn't raise at any multiple. Dozens shut down. Hundreds quietly laid off their workforces. The dream for many was over, but something unexpected happened to the companies that survived. Stripped of excess capital, forced to do more with less, they found a new weapon. Not headcount, not marketing, not growth at all costs. They found AI. The surviving companies rebuilt themselves around machine efficiency. They automated what had cost them millions in salaries. They replaced customer service teams with intelligent voice agents. They used machine learning to do in milliseconds what compliance teams had taken months to do manually. The fintech winter forced an AI spring. If you want to understand just how complete the AI takeover of banking is going to be, there is one story that cuts through all the noise. Every year, JPMorgan Chase employs lawyers and loan officers to review commercial loan agreements. Thousands of pages of dense legal contracts, interest rate clauses, collateral documentation, restructuring terms. It is painstaking, precise, and expensive human work. It used to consume 360,000 hours of labor every single year. JPMorgan built an AI platform called COIN, Contract Intelligence. It uses machine learning and natural language processing to read and interpret those same documents. And it completes that same work in seconds. 360,000 hours, seconds. That number isn't a typo. It's not an exaggeration. It is the cold, mathematical reality of what AI is doing inside the world's largest financial institutions right now. But the displacement of lawyers is just one piece of the story. The bigger, slower, more consequential displacement is happening in accounting. Right now, the global market for accounting software, your QuickBooks, your Xero, your FreshBooks, is valued at roughly $1.5 billion. Meanwhile, the global market for human bookkeepers, the actual people doing the actual number crunching, is valued at over $140 billion. That gap, that $138 billion gap, represents every invoice, every payroll run, every tax reconciliation that still requires a human being to complete it end to end. AI is now capable of closing that gap, not partially, completely. The entire workflow automated from first transaction to final report, without a single human hand. And it's not just lawyers and accountants who should be paying attention. It's anyone who answers a phone at a bank. Bank of America launched an AI assistant named Erica back in 2018. At the time, it was a novelty, a chatbot that could check your balance and tell you your last 5 transactions. Today, Erica serves over 42 million clients and has logged more than 2 billion interactions. It handles everything from fraud alerts to spending analysis to proactive financial coaching. And it never calls in sick, never takes a lunch break, and never puts you on hold. But if you think Erica is impressive, wait until you hear what's coming for loan servicing. A company called Salient is building AI voice agents specifically for consumer lenders. These aren't chatbots reading from a script. These are fully conversational AI agents that can handle collections calls, loan servicing inquiries, and dispute resolution, completely autonomously with full regulatory compliance baked in. They are infinitely patient. They do not get frustrated. They do not make compliance mistakes. They do not ask for overtime. And they operate across multiple languages, serving borrowers wherever they are, in whatever language they speak. The human loan officer, in many of the roles that exist today, is not being augmented by AI. They are being replaced by it. Everything we've described so far, the automation, the voice agents, the machine learning platforms, all of it comes with a mirror image, a shadow. Because for every AI system being built inside a bank to prevent fraud, there is a criminal organization on the other side building an equally sophisticated AI system to commit it. Financial fraud is not growing slowly. It is not a gradual, manageable trend. It is exploding, growing at 18 to 20% every single year, compounding, accelerating. And the weapon of choice for the modern financial criminal is generative AI. Creating a fake identity that passes KYC checks used to require months of careful forgery, physical documents, stolen credentials, elaborate backstories. Today, generative AI can produce a synthetic identity complete with a convincing face, a full social media history, forged government ID documents, and a fabricated credit profile in minutes, at scale, deployed in parallel against thousands of financial institutions simultaneously. But the most chilling development in financial crime right now isn't identity fraud. It's something with a name that sounds almost mundane until you understand what it means. Pig butchering. The name comes from the practice of fattening a pig before slaughter. In this context, the pig is you, the victim, and the fattening is the weeks or months of manufactured trust and fake relationship that precedes the financial kill. It works like this. A stranger contacts you online. They're attractive, friendly, articulate, and seemingly just randomly connected with you. Over days and weeks, they build a rapport. Then carefully, they introduce you to an investment opportunity, usually in crypto, showing you seemingly real returns. You invest. The returns look incredible. You invest more. You borrow. You put in everything. And then the platform vanishes, along with every dollar you ever put in. Until recently, pig butchering operations were run by human beings. Literal factories of workers, many of them trafficking victims themselves, operating out of compounds in Southeast Asia, Cambodia, Myanmar, Malaysia, sitting in front of computers, manually texting hundreds of victims at a time. That model had a natural ceiling. You need humans, and humans are limited. AI removed that ceiling entirely. The entire operation, the initial contact, the personality building, the relationship maintenance, the financial luring, the final sting, can now be fully automated by AI bots. One operator can now run what previously required a factory of hundreds of people. The scale has become almost incomprehensible. In 2024, pig butchering scam revenue grew nearly 40% year over year. Cyber criminals stole over $12.4 billion in digital assets alone. So how do the good guys fight back? They fight AI with AI. PayPal, which processes trillions of dollars in transactions annually, currently runs over 200 machine learning models in production simultaneously, each one analyzing a different dimension of risk in real time for every single transaction that touches its network. Every tap, every transfer, every payment is being scored, cross-referenced, and evaluated against behavioral patterns before it clears. And then there's Plaid's Protect Suite, which operates at a level of depth that most people don't even know exists. Plaid sits at the infrastructure layer of thousands of fintech applications. When you link your bank account to an app, any app, there's a good chance Plaid is the technology connecting them. This means Plaid observes user behavior across an enormous cross-section of the financial internet. Protect uses this network intelligence to build a trustworthiness score for every user, analyzing behavior across thousands of applications to identify anomalies that no single app would ever see on its own. It draws on a network of over 1 billion device and identity connections. If a fraudster is acting suspiciously on one platform, Plaid Protect can flag them on every platform simultaneously. This is the invisible war. No boots on the ground, no courtrooms, no handcuffs, just algorithms hunting algorithms at the speed of light across a global financial network that never sleeps. Here is the thing about all of this change that rarely makes it into the press releases. Most of it isn't being built for the people who already have access to the financial system. The banked, the credit scored, the people with 30-year mortgage histories and brokerage accounts. The most transformative application of AI in finance is being built for the people who the traditional system never had room for. Billions of people around the world have what lenders call a thin credit file. They've never had a credit card. They've never had a mortgage. The traditional FICO score, a system built on years of formalized borrowing history, simply cannot evaluate them. And so, for generations, they've been locked out. AI is changing that equation fundamentally. New lending platforms are bypassing the traditional credit score entirely and instead analyzing real-time income flows, recurring expense patterns, utility payment behavior, and even non-traditional signals like geolocation consistency in digital activity patterns to evaluate whether someone is a trustworthy borrower. The person who has always paid their rent on time but never owned a credit card? They may now qualify for a loan. The small business owner whose revenue fluctuates but whose payment discipline is impeccable? AI can see that even if a traditional bank cannot. For the first time in the history of finance, the criteria for creditworthiness might actually match the reality of how human beings live. And then there is the last frontier, the idea that will define what finance looks like for your children and your grandchildren. Embedded finance. The endgame of the AI revolution in finance is to make banking invisible, not to build a better bank, to eliminate the need to go to a bank at all. Companies like Ford and John Deere are already embedding their own captive financial services, loans, insurance, leasing, payment processing, directly into their products and ecosystems. You don't go to a bank to finance your farm equipment anymore. The financing is just there, inside the machine you're already buying, and this is only the beginning. In the embedded finance future, every major retailer, every logistics company, every social media platform, every employer will eventually offer financial services directly to the people in their ecosystem. Powered by AI, built on cloud infrastructure, regulated by algorithms and invisible to the user. The checkout experience, the payroll system, the credit line, the insurance policy, all of it, woven silently into the fabric of daily life. No branch, no teller, no form to fill out in triplicate. So here is where we land. Financial services represent $17 trillion in market value, and every single dollar of it is being contested, automated, defended, attacked, and rebuilt by AI. The fraud is real. The displacement is real. The opportunity is real. And the war, the invisible, algorithmic, around-the-clock war for your money and your financial identity, is very, very real. The future of money is not going to look like a bank. It's not going to look like a credit card. It's not going to come with a lobby, a marble counter, or a human being who asks for your PIN. The future of money will look like a line of code, running silently, invisibly, inside everything. The only question is, whose code will it be? If this video changed how you think about money and technology, hit subscribe. We publish deep dive documentaries on the systems quietly reshaping the global economy. Every week, the war for your money is already underway. The least you can do is understand the battlefield. This is Fintech Archives. We'll see you in the next one.